So Arista Networks has generated strong revenue growth over the recent decade that has accelerated since the wave of increased spending on data centers optimized for AI. Its revenue since 2020 has soared from 2.3 billion up to 8.4 billion in the most recent trailing 12-month period. However, investors are concerned that NVIDIA's networking technology and the bundling that NVIDIA can offer to buyers could dampen Arista Networks' revenue growth prospects. Still, Arista Networks has been a very lucrative business. The returns on invested capital have improved from 35% to 51% over the previous decade. A return on invested capital of 51% is super premium performance. It's among the leaders of all of the companies I'm following. And not only are you getting a great return on invested capital with Arista, you're getting a company that's improving. So oftentimes you might get one or the other with the investments. You might get a company that has a great return on invested capital, but the level is flat or declining, raising concerns about the future. And we get similar data when we look at the company's cash flow to sales ratio. That's improved from 15% in 2016 up to 49% in the most recent trailing 12-month period. So the company is trading at a forward price to earnings of 40, which I think is a cheap valuation for a company that's operating in the category it's operating inside and is generating revenue growth at a compounded annual rate of 25% in the prior decade and even more in the prior 5-year period, with returns on invested capital at 50% and OCF to sales ratio at 50%, and both trends in profitability improving meaningfully. So when I measured the company using the forward price to earnings ratio, it looked undervalued. But when I measured a company using my proprietary discounted cash flow model, it looks overvalued at $129 compared to the intrinsic value of $91. So I'm getting conflicting signals with Arista Networks. On the one hand, great revenue growth, great profitability, great unit economics at an attractive market multiple of a 40 of PE. And then on the other hand, you've got increasing competition from NVIDIA, and you've got an intrinsic value per share that's more than 30% below the current market price. So because of those conflicting signals, I have the stock rated as a borderline buy.
Click the link below to watch the full video.